Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Viking Therapeutics Inc. Annual Report. Viking Therapeutics Inc. is a clinical-stage biopharmaceutical company that specializes in developing novel therapies for metabolic and endocrine disorders. The company's pipeline includes several promising drug candidates that are currently undergoing various stages of clinical trials. One of the lead drug candidates is VK2809, an orally available tissue and receptor subtype selective agonist of the thyroid hormone receptor beta, TR-sharp-S, which is being tested to treat patients with non-alcoholic steatohepatitis and NAFLD. Additionally, the company is developing VK5211, a non-steroidal selective androgen receptor modulator for treating patients recovering from hip fracture surgery. The company's portfolio also includes VK612, which is in phase II clinical trials for metabolic disorders and anemia. Furthermore, VK2735, a novel dual agonist of the glucagon-like peptide 1, is currently undergoing phase I SAD/MAD clinical trial. Lastly, VK114, an orally available tissue and receptor subtype selective agonist of the TR-sharp-S, is being developed for X-linked adrenoleukodystrophy. In summary, Viking Therapeutics Inc. is providing a range of services including developing novel therapies for metabolic and endocrine disorders, conducting clinical trials for various drug candidates, providing treatment options for patients with non-alcoholic steatohepatitis, NAFLD, hip fracture surgery, metabolic disorders, anemia, and X-linked adrenoleukodystrophy. Viking Therapeutics Inc. Stock price stability. The stock price of Viking Therapeutics Inc. has remained relatively stable over the past year, with no significant changes. This stability can be attributed to several factors. Firstly, the company's pipeline of clinical stage programs continues to advance, providing a steady stream of potential catalysts for growth. Additionally, Viking Therapeutics' focus on developing novel therapeutics for metabolic and neurological disorders has resonated with investors, who see the potential for long-term value creation. The company's commitment to innovation and its strong management team have also contributed to investor confidence. Furthermore, the biotechnology sector as a whole has experienced volatility in recent years, but Viking Therapeutics' stock price has remained relatively insulated from these fluctuations. This suggests that the company's fundamentals are sound and that investors have faith in its ability to deliver on its promises. In conclusion, the stability of Viking Therapeutics' stock price over the past year can be attributed to a combination of factors, including the advancement of its pipeline programs, investor confidence in its management team and innovation strategy, and the relative insulation from sector-wide volatility. Viking Therapeutics, Inc. maintains a market capitalization of $3 billion, broadly in line with the industry peer group. Viking Therapeutics, Inc. trades at a higher price-to-book ratio of 4.81 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 3% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company are multifaceted and can be influenced by various factors. According to the annual report, clinical success of drug candidates is a key driver of revenue growth. If a company's drug candidates demonstrate positive results in clinical trials, it increases their commercial potential and likelihood of regulatory approval. Commercial potential of drug candidates is another significant factor that affects revenue growth or decline. The company's ability to successfully market and sell its products plays a crucial role in generating revenue. Collaborations with external partners can also impact revenue growth, as the terms and timing of these agreements can either boost or hinder revenue. In addition to these factors, research and development expenses and general and administrative expenses can influence revenue growth or decline. An increase in R&D expenses to advance programs can lead to higher costs, while rising G&A expenses due to hiring additional employees, stock-based compensation, and compliance costs can also impact profitability. Furthermore, the number and characteristics of drug candidates developed and commercialized, as well as marketing, sales, and distribution costs, are essential drivers of revenue growth or decline. The cost of manufacturing clinical supplies and establishing commercial supplies is another critical factor that affects revenue growth. Overall, a company's ability to successfully navigate these factors will determine its revenue growth or decline. The net income of the company has experienced a decline due to significant operating losses and lack of revenue generation. This trend continued as reimbursement and pricing challenges in international markets further contributed to the decrease in net income. The absence of specific information regarding changes in net income for certain periods suggests that these factors may have been consistent throughout. Profit margins have also been affected by various factors. Initially, they were not applicable due to the company's inability to generate revenue. However, as revenue began to be generated, profit margins remained low due to high spending on clinical trials and preclinical studies. The introduction of Medicaid drug rebates and alternative rebate formulas further reduced profit margins. Additionally, potential reductions in Medicare and other healthcare funding, more rigorous coverage criteria, new payment methodologies, and downward pressure on prices are expected to decrease profit margins even further. The company's financial performance reveals a concerning trend in its operating cash flow. For the past 3 years, from 2023 to 2025, the company has consistently generated negative operating cash flows. In 2025, the company reported an operating loss of $278.7 million, while in 2024 and 2023, it was $87.8 million and $73.4 million respectively. This persistent decline in operating cash flow is a red flag for investors and stakeholders, indicating that the company may be struggling to manage its expenses or generate sufficient revenue to cover its costs. The company's financial situation has undergone significant changes between 2024 and 2025. A notable increase in total liabilities from $28,000 and $43,000 to $76,667,000 indicates a substantial rise in debt level. This change suggests that the company may be taking on more financial obligations or experiencing increased expenses. Furthermore, interest expenses have also seen a considerable shift. Despite an initial decrease in interest income, net from $40,940,000 to $33,704,000, the potential impact of interest rate changes is significant. A hypothetical 100 basis point change would result in either a $0.9 million increase or decrease in interest rate yields on investments. This highlights the company's vulnerability to fluctuations in interest rates and underscores the need for careful financial management. Management's outlook on the company's strategy is one of continued investment in research and development. Despite having incurred losses since its inception, Viking Therapeutics remains committed to advancing its pipeline of drug candidates through various clinical trials. The company expects to continue to incur significant research and development expenses as it advances its programs. The management estimates that preclinical study and clinical trial expenses will be substantial, involving significant judgment and estimation. This suggests that the company is prioritizing the development of new treatments over short-term profitability. The fact that the company has a significant pipeline of drug candidates, including VK2735, VK2889, and VK114, indicates that management is optimistic about the potential for these treatments to succeed. However, the lack of specificity in certain financial metrics, such as investments and derivative instruments, accrued expenses and liabilities, and contingencies and income taxes, suggests that the company may be facing some challenges. Nevertheless, the overall tone of the report suggests that Viking Therapeutics is focused on long-term growth and development, rather than short-term profitability. Acquisitions and divestitures overview. The company has made a significant move through an acquisition, which is a strategic business decision aimed at expanding its capabilities. In May 2014, the company entered into a master license agreement with Ligand to acquire certain rights to research and development programs. This acquisition marked a notable milestone in the company's growth strategy. Notably, there are no divestitures mentioned in the report, indicating that the company has not sold any of its assets or businesses during this period. The focus remains on expanding through strategic acquisitions rather than divesting existing operations. The company's dividend policy has been consistent in its decision to not pay dividends. This stance is reflected across multiple pages of the extracted summaries. Regarding share buybacks, the company has taken a more active approach. It has authorized a stock repurchase program for up to $250 million over 2 years, starting from February 2025. However, it's worth noting that this program has not been utilized during the 12 months ended December 31, 2025. In addition to the current program, the company has also engaged in share buybacks through prior programs. These include a prior repurchase program and 2 ATM offerings, which have resulted in the repurchase or sale of significant numbers of shares. The pharmaceutical industry is facing significant challenges that could disrupt the supply chain. One major concern is interruptions in global shipping, which can be caused by unexpected changes in tariffs and trade barriers, or even the potential closure of clinical facilities. Additionally, delays in clinical trials and regulatory approvals are also a worry due to difficulties with contract research organizations, CROs, medical institutions, and contract laboratories. The manufacturing process itself is complex and highly regulated, making it susceptible to product loss due to contamination or equipment failure. Furthermore, shipment delays, inventory shortages, and lot failures can occur due to manufacturing issues, which are exacerbated by the limited number of suppliers for raw materials. Scaling up production to meet demand can also be a challenge, leading to potential delays in obtaining sufficient quantities of product candidates. The global supply chain is also vulnerable to disruptions caused by conflicts, resulting in constrained availability and increased costs of raw materials. These challenges highlight the need for companies to have contingency plans in place to mitigate these risks and ensure a stable supply chain. That concludes the financial summary for Viking Therapeutics Inc. Feel free to comment below, and I will be happy to answer them when possible.